Hello, and thank you for ABAN for organizing this panel, Angel Investing in Africa, together with the Southern African Innovation Support Program, SAIS. My name is Ilari Lindia, and I'm delighted to be here today to give this brief introduction on SAIS perspective on startup ecosystem and angel investing as a critical component within every well-functioning ecosystem supporting early-stage entrepreneurs and entrepreneurship all over the world. SAIS as a program is having a strong focus on innovation ecosystems. And this is a very common approach also to the all Finnish programs, that they focus on strengthening the conditions where innovation and entrepreneurship can flourish. In other words, instead of investing in a single application or service, the programs are looking to strengthen the operation of the local, national, and regional innovation ecosystems. So different role players, from startups to angel investors to the government officials, are part of the focus and creating value by transforming or helping to transform new ideas into the reality and bringing them to the use at the market, and of course to the opportunities for additional financial investments. The objective of the Finnish programs often is to identify the gaps in the ecosystems and patch these by supporting local champions who at the same time can act as a multipliers and cascade different benefits down to the ecosystem, to the startups, to investors and policymakers by bringing them together and to work and to collaborate on joint activities. The focus of SAIS is on startup ecosystems. And there's a reason for it, because we see that the startups and entrepreneurs, they seldom triumph in splendid isolation without support system helping them to go ahead. Success, of course, is always linked to the factors such as whether you have a good team, whether there's a vision, whether there's an excellent ability to execute your work plan. But at the same time, the availability of different incentives and support mechanisms can make a critical difference. Startup ecosystems, almost all over the world, are also fairly new compared to more established ecosystems, for example, those that are supporting manufacturing industries or applied research in various fields of sciences. This also means that the startup ecosystems can be a little bit weaker, and they may not benefit always that kind of established support as has been rendered to the more older and well-established ecosystems and the players within. So without a few exceptions, one can also see that the role players in the local level, they may have also fewer resources, despite the fact that it's the local level where innovation happens. That's where the products and services are being used. But it's also foreseen that there are maybe less sophisticated institutions that are supporting the operation of the ecosystems at that level. Therefore, the current program of SAIS programs on supporting ecosystems that are working with startups and early-stage entrepreneurs at local level seem to be very valid. So what is SAIS actually doing, and how SAIS is doing this? The main instrument for supporting ecosystem building and entrepreneurs within for SAIS is the Innovation Fund that is providing grants for the different projects that are implemented by the local champions. We support, for example, projects that are providing analytical work that are helping to open and understand better who are the potential actors and participants in the local entrepreneurial ecosystem. Going forward from the analytical work, SAIS is also putting heavy emphasis on supporting instruments such as accelerators and incubators. And the reason for this is clear. These are the players that we see are generating linkages between and within the local role players in ecosystem, but increasingly also reach out beyond localities to the regional level or even international level. In practical terms, the projects are, for example, looking to see how to improve the investment readiness of individual startups, how to build their capacity to understand and meet the investors' demand, how to talk to investors the language that they want to hear, but also how to talk government, the language that government wants to hear, and so forth. We know by now that it is the new enterprises, startups, and to a certain extent also SMEs that are the ones who are providing the fastest growing portion of jobs in the world, Africa included. So the important thing is to understand, of course, that the jobs are not there unless there are resources for entrepreneurs to grow. And hence the effort of angel investing and the importance of angel investing as a part of the well-functioning startup ecosystem. I want to give you a short run and understanding on how things evolved in Finland in the last 10 years, because Finland is a small country in Northern Europe with a little bit more than 5 million people. But in the last 10 years, it has changed quite drastically from a corporate-driven big business spearheaded by Nokia to one of the most dynamic startup centers in the world. The Finnish startup ecosystem is now ranked globally as 13 out of 100 system, as per the recent Startup Blink 2020 report. So Finland is just ahead of China as a country, tailing by the key African ecosystem, South Africa being 52, Kenya 62, Rwanda 65, and Nigeria 68. But it wasn't like this in Finland 10 years ago. It was a very different landscape. Investing, for example, in startups was an asset class that was completely unclear. Most people prefer to keep their money in stocks and property, or investing directly to the, even outside Finland, to the other stock exchange. Ecosystem didn't have a tools really to match startups with investors, and both sides, they were also lacking skills to meet each other and to analyze whether investment and a partnership would be worth the effort. So today we see that after 10 years, situation is completely different. Public sector is no more major financier of early stage ventures in Finland. It does chip in, but certainly not the majority holder. We also see that the landscape and interest towards ventures have changed drastically. Students and graduates nowadays start thinking about setting up their own instead of considering that this is a fallback option for me when I graduate if I don't get a job in a big business. There are several role examples exist, for example, coming from the gaming industry. And these also have interest to give back to the community and invest in the system. So this kind of a positive spiral is taking place. As a result, we see today an ecosystem that is quite tight and works well for the early stage entrepreneurship. Events like Slush are not just events, but these are ecosystemic activities that are tying players and resources together, including, of course, the local and international angel investors looking for deals to invest in. But it's also organizations such as FIBAN that have been setting standards and skills with various members now starting to work more professionally towards their own peers, but also towards potential ventures to invest in. We also see that the Finnish scene is widening and the startup scene is growing beyond city of Helsinki. And today we see that there are different hubs accommodating all levels of services for the early stage entrepreneurs in 4 major cities in Finland. So FIBAN, in a sense, it is really about investing in professionalism, but also looking on impact. Today, we see that the Finnish angel investing community, people are more educated and they are better equipped to invest. There's a larger pool of very experienced lead angels operating also internationally. And transparency and inclusivity in investing has increased and it has become a standard. Impact is integrated throughout the deal flow and in the co-investment process, and it is part of the FIBAN's educational effort as well. Despite of this, the mission remains the same. There are 3 core issues or 3 core areas where FIBAN is operating. Education and investment materials, world is changing and it's constantly need to be updated. representation of the private investors' interest towards other role players in the local, national, and even international ecosystems is vital. And finally, of course, the core, making sure that the deal flow is working, matchmaking startup and investors and co-investing opportunities. These are the key areas that ABAN probably signs well off as well. So I will leave you with this one final slide, which describes SAI's effort, how we are assisting in creating more robust angel investing environment in Southern Africa. This project is a market validation project spearheaded by Africa Angel Academy, and it provides the validation for the first ever course for local angels and angel networks that is piloted now in 4 countries in the SADC region. We are delighted to be part of this effort, which still continues a couple of more months, and I'm sure Alex and the rest of the panel will have ample opportunity to discuss a little bit about the content and result of these activities as well. Finally, I would like you to invite you to look at the SAI's website and to see that our ongoing call, Innovation, Rethink the System, is open until 4th of October. We are looking good proposals that are providing solutions that can actually strengthen the robustness and the resilience of startup ecosystem from different perspectives. Go and visit our website, follow our social media, and send us an application. Thank you for taking the time to listen to this introduction, and I wish you a great panel. Thank you. Bye-bye.
Hi everyone, thank you for joining this panel on angel investing in Africa. It is great to be back at the SA Innovation Summit, another beautiful day in Cape Town, South Africa. My name is David van Dijk. I'll be the moderator of this panel, and I'm joined by some good friends from across the continent. We have Isabelle de Mello, who's calling in from Post Lafayette of the island of Mauritius, Alexandra Fraser calling in from Cape Town, and Stephen Gugu, who's based out of Nairobi, Kenya. And together with these 3 investors, we're going to speak about angel investing in Africa. Maybe it's good to do a quick round of introductions. Alex, if I can start with you, maybe you can share a few words about your background and also your involvement with angel investing. Thanks.
Thanks, David. Good day, everyone, and lovely to be here on this panel. My name is Alexandra Fraser. I'm one of the founding members of ABAN, the African Business Angel Network, and I'm also a partner at Dazzle Angels. Dazzle is an angel investment group that is focused on investing in women, specifically in South Africa. And together with David and Stephen, we've also recently launched the African Angel Academy, which is an online training platform.
Thank you, Alex. Isabelle?
Yes, Isabelle de Mello, thank you. I am an angel investor based out of Mauritius. I started this adventure with a network called Go Beyond out of Europe. And when I moved here, with the help of David that I met in South Africa at African Business Angel Network Conference, and Alex, I am now trying to set up angel groups in Mauritius, and it will be launched officially very soon under the name Morris Angel, Morris being the Creole version of Mauritius.
Thank you, Isabelle. And congrats again with the upcoming launch of the Morris Angels. Stephen?
Thank you, David, and of course, thank you, Alex and Isabelle. Glad to be part of this panel. Stephen Gugu is my name, out of Nairobi. So I'm an angel investor. I've done 4 deals at the moment, and I'm one of the founders of Victoria Business Angels Network. And as Victoria, we have 42 angel investors. We're looking to make investments in Kenya, but eventually to expand that into East Africa. I also work with ABAN, so I'm one of the founding members for ABAN, looking at East Africa, and I'm quite keen to share some experiences around angel investing from this part of the world. Thank you.
Thank you, Stephen. Great. So Stephen, maybe just to stay with you for a second, for the sake of this discussion, could you just take a minute and sort of give us a definition of what is angel investing and where is it positioned as compared to other types of investing, venture capital, private equity? What makes angel investing angel investing?
Thank you, David. I mean, angel investing is at the core individuals investing their own capital into businesses, early stage businesses. And we speak about three kinds of capital. The first one is financial capital, where you put in your own cash into an early stage business. The second thing is your connections. So then you make introductions to these companies, these early stage companies, because most of the times when they start off, they need to be able to connect with different businesses for different opportunities and so forth. And then thirdly, your mentorship, the fact that you spend time with them. Ideally, you should have a bit of experience that you can be able to share. Could be from a sector perspective. It could be from just experience of being, in management positions. So how it differs from the other asset classes is that because one, you're investing your own money. If you think about venture capital, private equity, it's usually institutional cash that you're looking at. Two, I would say that you typically invest very early stage into the companies, and so you'll find that most of the times you're the first investor that is coming on board, and so you're not only an investor, but you're also a mentor, you're a friend, you're a coach, you're everything to the startup at that point. Yeah, thank you.
Okay, very good, very helpful. And then Alex and Isabel, so both of you have been initiators or co-conspirators of setting up new networks quite recently at the Dazzle Angels a few years ago, and then for Isabel, that's a process that's ongoing. So why this investing in a group format? I mean, everyone is a busy, you're all busy people. Why do it with a group versus sort of just doing this by yourself?
My first experience as an angel investor, I don't think I would have ever done it if I hadn't had the opportunity when I started with Go Beyond. The reason is that it's both for deal flow. I mean, by being a group, you have such a broad group of people that can bring interesting startups to be looked at and evaluated. Honestly, it's more fun. But more importantly, it also brings such a diverse skill set because you have people that are in different geographies, in different fields of life, in different stages, with different availabilities. And by doing that, you're able to provide these startups that expertise, whether it be in finance, in sales, in development, in IP, etc. And I think that it's this broad skill set, which is probably the most valuable, because with the skill set also comes the network, etc. So I think that has made the adventure more easy, less risky, by having this whole ecosystem of people contributing to the evaluation of startups.
So just to build on what Isabel said, I think the other thing is if you only have limited capital, it's doing deals takes a lot of time, and if you are a busy individual and you're running other businesses and have other interests, it's quite difficult to carve out time to do deals specifically. So having a group of people to work with to get deals done, and to also spread your available cash across a number of different deals as opposed to one or two is really useful. And just again, to echo what Isabel said, it's really fun, and it's unbelievable the amount of learning, even if you've got some angel investment experience, that you get from working with others, understanding different viewpoints, different ways of looking at problems or looking at opportunities, and just being part of that network, which is really a lot of fun.
Okay, good. And so there might be people in the audience right now who would like to learn more or would consider getting started. So would you recommend them to join an existing group, or would you invite people to start new groups? So you've all been involved with setting up new groups. Was it because there were no existing groups yet, or because there was something you want to do with the group? What was sort of the thinking behind that? And I guess Steve, you can also take that question.
Thank you, David. And I think also important to note that under Africa Business Angels Network, there's over 64 angel groups which have been created across Africa. And so while you may want to create a new group, there's already groups which are existing. But then coming back to your question, I think if you're starting out as an angel investor, it makes more sense to join an already existing group. And that's just because it saves you from the headache or the complications of having to set a group and then to make an investment and then to learn how to invest, right? Because when you join a group, ideally you're expecting that there's a couple of experienced angel investors who are part of the group. And so they will sort of like handhold in terms of deal sourcing. So you'll already get a deal flow. In terms of the process of making investments, there's probably a deal lead that you'll be working with that you can follow in this case. And so there's advantages of starting with a group that's already in existence. But let me just also hear what Alex and Isabel would like to add on that.
I did a few deals with other angels and with groups, and there wasn't, because it wasn't in a structured group format, there wasn't those kind of benefits. And also the reason why we started Dazzle Angels was that while there were existing angel groups, there were no angel groups that were really focused on women. And we started off Dazzle with 4 of us who were all really passionate about investing in women. And because this wasn't really a focus area of other angels, we decided to create our own group. And that's been the journey that we've been on. We've made a few deals, but also, as Stephen says, if you are a new angel, it's quite tricky to start everything from scratch. And so it is important that even if you are considering investing or becoming an angel investor, you maybe speak to a few experienced angels, you understand what it's really about, you understand the risks involved, you do a bit of reading, you maybe go on some courses, and really, I think the first phase of becoming an angel is doing quite a lot of kind of investigation and research and learning.
In the particular case of Mauritius, to be honest, the reason we're starting a group is there were no groups. And had there been an established group in the way that I've learned to appreciate it, then I think I would have gone for that. And it's just, it is because there was nothing in the ecosystem. Everything was extremely fragmented, but I could feel that there was a yearning of different people to try and do it. What also happens when you do it with a group is you get the benefit of something that's established. Today, more and more of the groups have to be extremely structured, just almost like funds. I mean, in terms of you as a group will also want to go into the KYC, make sure that your investors have gone through KYC, because you don't, I mean, the reputation of your group is also important. And you're also going to be sharing a lot of the learning experiences, whether they be by learning by doing, or whether they be through training that can be shared. I mean, there's a lot of training out there, but there's also sometimes training which is tailored to a given group depending on what area of focus it might have. So for all of these reasons, I feel if you have a group there, then that's what I would do. I would first go out and see what is available out there. And then as you get perhaps a little bit more mature and you might be more focused on a vertical, then you might want to go and create your own group. But it's quite a job, you know, going through the whole process. And I must say that the reason we're at this stage here in Mauritius is thanks to African Angel Academy, because it helped us, number one, meet the people that also wanted to do the same thing. And it has also helped provide us with a framework to move forward. I mean, we're learning every day when we're meeting with people about areas that we should dive into more. How do we integrate public assistance, DFIs, etc. So it's quite a journey. And so if something's already there, then I would certainly jump on that bandwagon before I would go out and do it on my own. I had the privilege of having had the experience of being a member of a group in another geography, and that was really what made me more comfortable to go forward and do something here.
The fact that you go to a group doesn't mean that you necessarily have to co-invest in the group. There's groups that are just formed for deal flow and just for networking. And so then when you go there, you'll be able to see a lot of deal flow to network. And so you can still choose your own investments with a few other members, but you don't have to syndicate. And so then there's this fear that if you join a group, then you have to co-invest together. Shouldn't be a fear that someone should have. Groups have different approaches to making investments.
So one of the things that comes up in this conversation is education, the need for education. And I think that a lot of people that are attracted to angel investing are probably experienced investors already. They have a real estate portfolio, they do stocks and bonds, etc. So I want to try and sort of understand what kind of education or knowledge is involved when we talk about angel investing, and why is that critical? Why do I need that? If I understand investing in property, then don't I have enough to work with in terms of investing in a new company or so? And maybe then we can also use that to kind of give a little bit of background about this African Angel Academy and what it is and why it was set up and what it's trying to achieve. And maybe I can invite Alexandra to speak about. Maybe you want to start with this, with the Angel Academy. So what is it, and why did you help set this up?
The African Angel Academy, which was supported initially with a grant from SAIS, was really to amplify a lot of the work that ABAN and ABAN members and various angel groups have been doing across the continent. A lot of the work done to date has consisted of workshops and masterclasses, and while these have been really effective in the past, there's a limit to how scalable these can be, and a limit to kind of travel. And I think COVID has really shown us that we can still meaningfully connect online across the continent, and we can share knowledge, resources, and education. And so the purpose of the African Angel Academy was really to collate international best practice, but couch it in or position it in an African context and present best practice and in a modular form based on experienced angel investors from across the continent. So the Academy has a number of modules. Each module has an expert interview with experienced angels. It then has a series of slides and lessons based on the particular subject, as well as resources and tools for new angels to use, including some templates. For example, if we are looking at valuations, then we would take you through the importance of valuations, different valuation methodologies, and some evaluation examples, as well as valuation tools. And by providing all of this content in an online space, we can hopefully train more angel investors and more groups, but also provide a repository of information, make sure it's all in one place so anyone can access that at any point in time.
Okay, thank you. And this is available to everyone right now, or where are you in the launch, if you will?
So we are currently in the process. We have a cohort of 57 angel investors, which are currently have gone through the training on the platform. We are configuring it. So please, if you visit the Angel Academy, africanangelacademy.com, you can sign up for our newsletter and you can indicate whether you would be interested in either joining a next cohort or signing up individually. And we will then send you more information so you can log on and complete the course, either as a cohort or in your individual capacity when it suits you.
Okay. And just any other sort of comments from either Isabel or Steve in terms of education or why it's important or different, or maybe it's back to that, that question on what makes angel investing, why is it different from investing in real estate or so?
I think that a lot of people don't go into this because they feel that they are not knowledgeable as investors. And I think the value in doing this, in angel investing as a group, is the fact that you have this viewpoint from somebody that has perhaps done their whole career in marketing, or that has been a teacher, or that has, and so you want to try and level the field of knowledge so that when you do the due diligence, everybody is aware. And even though I've done my career in corporate finance, I still find it a very enriching experience to go through. It's almost like a refresher with the new pointers, new ways of looking at things. you know, we're in this permanent learning process, and this has contributed a lot. There are deal terms, and it's also what I've also found it to be very good for is when you are dealing with the startups, the fact that you've gone through this is you're teaching them also how they should be positioning themselves and how they should be establishing their own deal terms and their shareholder agreements. Because a bit different than when you're just buying a company, you're also nurturing them and helping them defend themselves versus certain investors that might not be the right ones for them. And it has to be a very balanced exercise to invest. It's a partnership that you're trying to build with the startup. And I think that for all of those reasons, I feel that I have found the training element to be a very key element of the angel investing journey, in particular as a group.
Okay, thank you.
David, just to add on that, I think one author that I really like in entrepreneurship is Steve Blank. He's a professor of entrepreneurship in the US, and he has a nice page where he has quite a number of interesting blogs, steveblank.com. And one of the things he says is that a startup is not a smaller version of a big company, but a startup is a company that's been created to test new business models and to scale new business models. And so if you sort of like take that, you know, a small company, an SME, the process that you take in terms of valuing it, structuring a deal for it, I don't know, you know, just putting a deal together around that is very different from what you do for, it's quite different from what you do for an SME, for a corporate and so forth. So I find that going through the training, there's some insights that you get over and above what you would use for a traditional business that are only applicable for this startup phase. Remember, you're talking about a company at times doesn't have any revenue. So how are you going to value it? How are you going to choose how much equity you should put in? Maybe there's only just 2 founders, or there's only 1 founder with an idea. So how do you go about thinking about, should you take 50% equity? Should you take 20% in the first round? And then there's just the lingo that goes with it, right? People speak about safes, keys, convertible notes, etc. So at times also just realizing what the lingo itself means adds a lot when you go for some of these kinds of trainings, just to be more comfortable the next time you're looking at the next startup and they share with you a kiss and you're like, no, I don't want to be kissed. And then you realize just an agreement that they're talking about, you know? Yeah.
Ah, good. Okay, thank you so much. So I think that I would like to sort of take the conversation to the entrepreneurial side of the puzzle as well. Assuming that there's quite many entrepreneurs that are sort of in the audience right now who would like to understand, so how do I connect with angel investors, and you know, what do I need to do, and what makes my proposition attractive, etc. But before we do so, I'd like to just go back to Steve for a second. And you spoke about syndicates and deal leader. So what is that exactly?
Well, it's part of the repertoire of the lingo that then is used in this early stage investing. But going to those specific terms, the deal leader, you'll find that mostly in a deal, even in an angel group, there's probably one person who has a lot of experience in that sector. Probably is the one who's come with that startup to the angel network, to the angel group. And so is willing to say that I'm going to participate in this deal. I'll probably put in a substantial amount compared to other angel investors. And so if other angels want to follow me, I'll lead the due diligence, I'll lead the deal negotiations and so forth. And so it makes it a bit comfortable then for the other angels to follow because they trust this person. And most often you may find that this person also is very experienced as an angel investor. They've done a couple of deals that you can see. And so you're more comfortable with that. I think in terms of the syndication, syndication just basically means investing in a group. So there's different options when you're looking to make an investment. So one could be that we go in and in the cap table, Alex is there, David is there, Isabel is there, and all of us are individual investors in that deal. Then we could also decide that we're going to syndicate this, and maybe we create an entity, another company, and we are all shareholders in that, and we make one investment together. It doesn't matter what the shareholding in our original company would be. So in this case, we'd say that we've syndicated this deal, and so rather than having all of us in the cap table, there's only one of us that's there in the cap table.
Okay, and maybe just some examples. So in your the angel network that you're a part of, the VBAN, the Victoria Business Angel Network, you invest via syndicates, do you, or how do you individually, or how does it work?
So we found sort of like something in the middle of that. So we invest individually into the deal, but all the different angels sign a power of attorney to the angel network manager, which is Victoria Ventures. And so to a certain extent, yes, you're listed in the cap table, but the decision making will be made together and will be the representative to the company. And we found that to be a good way of making investments because one, when we got started, there was an element of trust where people say, I want to be there. I'm used to owning my piece of land and it has my name. So if I'm going to be part of a company, I also want to have my name there. But then also looking at it from the startup's perspective, there was this fear that we don't want to have to consult 20 people, assuming there's 20 people who participate in the syndicate. Whenever we want to make a decision, we want one person. And so we found this middle ground that then works for both the startups and works for our angels.
Okay, very good. Alexandra, your Dazzle Angels, how are deals done?
We are a syndicate. So essentially, the way that we have been structured is, well, it's actually technically a partnership, but all the angels contribute the same amount of capital into a pool, and we then invest. Actually, we have a registered company, and we are all shareholders in that company and invest as a company. So and then we elect a representative who has, again, power of attorney and represents all of our interests to serve on the board and help make decisions. And so on the cap table, literally it will just say Dazzle Angels as an investor. And that's how we've structured it. And it also makes things a little bit easier because all the capital is committed up front. We know exactly how much capital we have in our bank account to invest, and we know what our average deal size is. And that is how we chose to operate our initial fund or partnership. And so far it's worked quite well.
Okay, so the Dazzle Angels is pre-committed capital and they invest as a group. And then with Victoria in Nairobi, I guess you invest on a per deal basis, right? So people can opt in or opt out. Okay.
Yeah.
Isabel, for the Moors Angels, have you already come to an agreement or thinking about how you will structure this for your network?
Well, I think, yes, the way we went about it is we set up a survey to try and establish a bit what was the appetite of the people in our broader network here that would have been interested in doing this. Number one, how much would they want to commit? Would they want to have it in a format where it was upfront, etc.? And we've had a mixed return. Some people are probably going to use the network or the program as a deal flow provider and may continue to invest on their own. In that case, I think we're going to be probably looking at a membership system so that they contribute something in exchange for the information, but they won't be the beneficiaries of the due diligence that we might do. And we have other people who are willing to invest together, but not necessarily put all the money up front. I guess perhaps because the people don't know each other that well at the onset. Perhaps when we've gone into a second cohort, if I might say so, we might be able to do that more easily. So we're probably going to be doing something in the middle, having a commitment. So there is going to be some form of partnership agreement so we can define the rules of how we function, how we decide on deals, how we invest. And probably we'll be calling either 1/3 of the amount that they're committed to every 6 months or every 4 months. So that is still something we're trying to fine tune so that we can make almost everybody happy.
Very good. Thank you so much. So I would like to ask you sort of one final question to all of you, which is basically, if you could if you could share one lesson learned from the work you've done in the past years, or sort of one piece of advice to the audience, then what would it be? What do you want people to take away from this particular session? Alex, want to start with you maybe?
So my piece of advice is that if you're passionate about working with entrepreneurs and supporting startups in their growth journey, and you feel like you could add significant value, you don't need to wait until you're a billionaire or a millionaire and retired to become an angel investor. By joining forces with other like-minded individuals, you can support startups by combining your resources and a bit of capital to really invest in businesses. So angel investment might not be for everyone in terms of risk profile, but if you are passionate about startups and you are passionate about supporting entrepreneurs and really enjoy working with early stage businesses, then consider angel investing. It's an easy community to join. It's very open and friendly. The resources are there, and yeah, start on the journey because it is a lot of fun.
Thank you so much. Isabel?
I thought that perhaps for the startup side, I think one of the lessons is don't think too small. Think big. I think that's really important, even though in your execution, you're going to think smaller and you're going to have milestone. But from the onset, have big dreams, because it's by having big dreams that you're going to align with the passion of the investors and that you're going to take them on your journey. And yeah, this is something, you know, there's a sparkle in all of this. And we're all trying to give back in some way also. We didn't talk about that, but sure. And by having a dream, we're going to help you along.
Thank you so much. Stephen?
Yeah, I mean, for me, I guess two parts. Number one, if you're interested in angel investing or maybe on the fence, I think angel investing is becoming more and more mainstream, because if you look at the other investment, opportunities, real estate, stock exchange, money markets, and so forth, I mean, the returns have not been that impressive. If you look at the last, 10 years, 20 years. I mean, if I look at Kenya and East Africa, it's been single digits for all of them. And so while angel before, people would say it was too risky and you didn't know whether you make a return, now it's becoming much more interesting. And add on to that what Isabel mentioned, there's a lot of impact you're having. You're creating jobs if the company grows big. You're helping someone to realize their dream. I mean, it's just the perfect, match that you're putting together. And I guess the last part for me is for an angel investor, what I've learned is you learn so much on your first deal than you'll ever learn when you're doing all the theory. I mean, of course, it's you don't want to lose any money, but the sooner you can, together with a group, get onto your first deal, do your due diligence, negotiate the deal, value it, and so forth, you'll find that you learn so much. And once you're done with that, you almost feel like, now I'm done with the learning. Let's bring in the other deals. Yeah. So start already.
Okay. DeMello from Post Lafayette in Mauritius and Stephen Gugu out of Nairobi, Kenya. Thank you so much. Please do reach out to us here at the, so when we're networking at the summit, or you can find us, I guess, online or via LinkedIn. Thank you again, and have a great remainder of the South Africa Innovation Summit. Thank you. Bye-bye.
So thank you to everyone in the audience for all your questions. We've tried to answer many of them in the chat, and thank you very much for joining our panel. I'm going to start off with Isabel and ask her to answer one of the questions that was asked by a participant.
So what are angel investors struggling with most when it comes to startups, and how they are prepared? What should improve to be investor ready? I think today, with all the information that's available out there, all the tutorials, all the videos and everything, there's really, even if you're not in an accelerator or an incubator, there's really no excuse not to know exactly what is expected of you by most angel investors. So I think that's the first thing. Being investor ready is also understanding for a specific angel investor that you're going to be meeting, or a group, perhaps what are the key things that that they are interested and focused on. You know, they may have a different angle, and so you need to address those key points You need to know who you're pitching to. And I think that aside from the fact that your idea and your project should be investment ready, you need to you should drill yourself. Get somebody to help you drill. I mean, I'm talking here, it's a bit the last phase, but it is important. Get somebody to drill you, because it'll raise some questions, and that will help you perhaps fill some of the loopholes that there are in your pitch.
Thanks, Isabel. And Stephen, I think there you go, your question's on screen.
Thank you. The question is, what do angel investors do when they're unable to get their investment back from a startup as agreed? And maybe the first thing that's important to note is that out of the total deals that an angel investor does, if you assume sort of like 10 deals in this case, almost 70% of them, they're going to lose money on them. That means 7 out of the 10 will probably not survive in this case. I mean, at least those are the ratios that are there internationally. So, and that's not because of the fault of the angel, it's just because startup investing is a risky sport, if you want to call it that, or it's a risky asset class. So to that extent, angels are generally open to, maybe not say open, angel investors realize that they may end up not recovering some of their investments. What angel investors are looking to do is to maximize their return on a portfolio basis. Having said that, and sort of like adding on top of that, as an angel investor, therefore, you'll do as much as you can to improve the chances of the business to survive. But if the business does not survive because of the economy, business-specific factors, you'll most probably be okay with that because it's a risky sport, as mentioned. However, if angel investors feel that they've not generated a return, or they've lost money because of impropriety or those kind of things, then angels could decide to take legal means to pursue the entrepreneurs who are behind that. But just to be clear, angel investors do accept the fact that some of their investments will not work. Thank you.
And thank you very much, Stephen. So my question is, are there any angel investors in Africa that specialize in a particular business sector, and do angel investors take up equity? So yes, I think something that's come through in a lot of the questions that were on the panel discussion was asking whether angels invest in particular sectors, from mining to food and beverages to furniture manufacturing. And the answer is, the angel investor will have a particular investment strategy or investment mandate, and they will then invest in particular sectors or in particular areas that they feel they can really add value to and are of interest to them. Some angels, for instance, only would say prefer fintech or financial services based businesses. Others might have a preference for consumer goods or whatever their area of expertise or interest is. And as an entrepreneur, it's your job to do your homework. Most angel groups have a website where they list their investment strategy or tell you what they're interested in terms of sector or stage or type of business. And so you need to do some investigation to find out what angels are interested in. And then, do angel investors take up equity? So angels do take up equity in businesses. Some angels do take up debt initially. So they do a convertible note, or they provide debt to a startup, which can often convert into equity at a later date. And this is because valuing a startup in the beginning or initial stages is very difficult. And so this allows them to invest in the business, but then convert their debt into equity at a later point when the business has some traction and they can come up with a realistic valuation. Any other comments, Isabel and Stephen, from you on that point? Sorry, I think we lost connectivity there.
Well, I think on the specialization, as you said, that also comes with the mature of the market. Once you have a number of angels that have been active, then suddenly they get specialized, and that's when you'll get verticals, people like healthcare or fintech and so on, because these are very, and as the startups also get more sophisticated, some of them are really not easy to grasp for people that aren't savvy in any one of these segments. And so if there enough is the critical mass in terms of investors, yeah, you might want to go and work in an area that you have a special expertise on, because your experience will make your investment better.
Alex, I wanted to just add one more comment, and maybe just to make it practical on the question I was asked, what happens if an angel investor loses money? So as mentioned, I have a portfolio of 4 companies, and one of them is looking like it's going to lose money. And the thing about that is we're very good friends with the entrepreneur. I know that they've put in, a very good effort to make sure that the startup works. And to the extent that, assuming that we don't end up making money or the startup ends up collapsing, I will have no problem with that. And actually, I'd be willing to back the entrepreneur, because there's this saying that goes, second-time entrepreneurs are actually more successful than first-time entrepreneurs. So if you're out there and you're wondering, angels like second-time entrepreneurs quite a bit, especially because they know they have very good experience. Thank you.
So that brings us to the end of our discussion. Thank you all very much for tuning in to the SA Innovation Summit. Enjoy the rest of the summit. We've got some information up on the African Angel Academy in the investor area. You can also visit us on our website, African Angel Investors, AfricanAngelAcademy.com, and we also are available as well, so please reach out to us and have a chat. Enjoy the rest of the conference.